Opendoor stock continues to captivate attention as one of the most volatile yet intriguing names in the real estate tech sector. After a dramatic post-earnings sell-off on Wednesday that saw the stock fall nearly 25%, Thursday offered signs of stabilization. The stock closed modestly down by just 2 cents at $1.85, and in the aftermarket, it held steady around that level. This price action sets the stage for what could be a crucial turning point in the company's medium-term trajectory. Let's rewind briefly. Tuesday's earnings call delivered a mix of positives and tempered expectations. The headline results were encouraging. Opendoor sold 4,299 homes in the quarter, generating $1.6 billion in revenue, a 5% increase from Q2 2024. Gross profit came in at $128 million for an 8.2% margin, and contribution profit was $69 million for a 4.4% margin. Most impressively, the company posted $23 million in adjusted EBITDA, marking its first profitable quarter on that basis in 3 years. Net losses narrowed to $29 million, with adjusted net losses landing at just $9 million. Despite these gains, the market's focus shifted quickly to the company's forward guidance. Management indicated that acquisition volume and inventory would dip in the second half of the year due to a persistently high interest rate environment. This cautious tone overshadowed the positive financials, leading to the knee-jerk aftermarket sell-off on Tuesday and follow-through weakness during Wednesday's session. However, as we discussed yesterday, many of us saw this sell-off as overdone, a technical reaction driven more by sentiment and headline skimming than by fundamentals. And that brings us to Thursday. Although the stock did dip again during the regular session, the losses were limited to just 2 cents. More importantly, the tone across retail platforms and media began to shift from panic to reflection. One of the louder voices in this space continues to be Eric Jackson, the founder of EMJ Capital. Jackson appeared on Yahoo Finance on Wednesday and again took to Bloomberg Radio on Thursday to reiterate his belief in Opendoor's long-term viability. Jackson made headlines not only for his support of the company's model but also for his criticism of current leadership. In both interviews, he floated the idea that a change in CEO could unlock value, reposition the company, and reinvigorate shareholder confidence. If that wasn't enough, Jackson also shared an open letter addressed to Opendoor's management team and board of directors. The letter, which has now been widely circulated on platforms like X and Reddit, echoes the frustration of many long-term retail investors. It calls for a new leadership vision, better transparency, and a re-energized strategy that aligns more directly with shareholder interests. Here's why that matters. This letter isn't just another social media rant, it appears to be the beginning of a broader shareholder movement. For a stock like Opendoor, which relies heavily on retail participation, sentiment is everything. Retail traders have helped drive Opendoor higher before, and they could easily do it again. What we're seeing now is not just a bounce attempt but a potential grassroots pressure campaign that could put serious heat on the boardroom. The underlying macro story could help fuel that pressure. While Opendoor's softer guidance is understandable given the housing market's current challenges, we can't ignore the growing speculation that the Federal Reserve may cut rates as early as September. We've seen weaker-than-expected jobs data this week, and bond markets are increasingly pricing in a policy shift. If that happens, mortgage rates could decline, housing demand could stabilize, and Opendoor's ability to acquire and move inventory could improve rapidly. So, let's walk through what happens from here. Scenario 1. Retail sentiment takes control again. Investors digest the reality that Tuesday's results were actually quite strong, and that any short-term softness is simply the cost of operating in a high-rate environment. Pair that with signs of macro easing, and you have the ingredients for a renewed rally, and yes, even a short squeeze. Remember, Opendoor remains one of the most shorted stocks in the market, with a large portion of bearish positions still underwater. Scenario 2. The stock stays range-bound for a few more sessions, with Wall Street waiting for more clarity from macro data or company-specific developments. In this case, the key will be whether voices like Jackson's continue to gain traction. If institutional investors or activist funds join the chorus, the pressure for leadership changes may intensify, which could itself be a bullish catalyst. Scenario 3. The stock slips further, as the media continues to harp on the second-half guidance. Even in this case, the dip could be temporary. Opendoor has proven it can operate profitably in a tough market, and if macro winds shift as expected, the narrative will quickly turn. Personally, and this is not financial advice, I'm leaning bullish. I added to my position earlier this week and remain confident that the market is undervaluing both the operational progress and the optionality embedded in a rate cut environment. The frustration we're seeing from shareholders is not the sound of capitulation, it's the sound of conviction. And conviction is a powerful thing. It's also worth noting that Opendoor's status as a technology-driven disruptor gives it a leg up as the housing sector inevitably rebounds. With algorithmic pricing, instant offers, and scalable infrastructure, Opendoor is built for volume. The current slowdown isn't permanent, it's just part of the cycle. When demand returns, Opendoor could be positioned to scale more rapidly and more profitably than its traditional competitors. So, what should we watch for heading into Friday and beyond? Any shift in media tone around the Jackson letter or CEO speculation? Signals from the Fed or new macro data that support the case for rate cuts? Renewed social media and retail buzz, especially on Reddit and StockTwits. Further stabilization in price action as a base begins to form. This is a dynamic situation, and we'll be tracking it closely. Whether you're trading short-term or investing for the long haul, Opendoor remains one of the most fascinating stories on the market. Drop a comment below and let me know what you think of Eric Jackson's letter. Do you agree that it's time for a change at the top? Or do you think management is on the right track and just needs time? As always, like, subscribe, and hit the bell so you don't miss the next update. We'll be following every step of this journey. Thanks for watching.